Good day. My name is Mark Mellor. I'm an attorney here in Riverside, California. I've got a number of clients out of Claremont that are dealing with the establishment of new businesses or current businesses that they want to incorporate or establish a new limited liability company to help protect them for liability and tax purposes. Let's discuss some of those distinctions right now. Let's get started. So first thing that I think it's important to discuss is the tax implications of starting a separate entity. You obviously have the liability protection in doing so, but some of the tax consequences I think are important. So when you talk about starting a corporate entity, you need to seek the advice of a certified public accountant to discuss what's going to be better in your line of work. For example, with an S corporation, you're taxed singularly, meaning the incomes derived from the corporation but flows through to the owner or owners of the corporation in Schedule K on a 1040, meaning that you're just taxed once on the income from the corporation. Whereas a C corporation, if you file for a C status with the IRS, the corporation is taxed at its income level, and then the individual derives the income, and the individual is taxed at the individual rate from that income they're so derived. So you get a double taxation in effect. And then you might ask, well, why would anyone want to file a C corporation if they're going to be doubly taxed as opposed to an S corporation? And the reason for that is severalfold. Number one, an S corporation is limited to the number of shareholders it can have and also to the type of shareholders. It can't have corporate shareholders, for example. There are some minor exceptions to the rule, like trusts and so forth, but for the most part it has to be individual shareholders. If you are a corporation and you want to have corporate shareholders, then a C corporation is for you. But secondarily, I think some of the deductions that are available to C corporations are not available to S corporations. But that's a discussion that you need to have with your CPA to determine which one of those is right for you. And then finally, I find that many times some of my investor clients out of Claremont are dealing with issues that are related to limited liability companies from a taxation point of view that are more beneficial for them. In other words, I have real estate investor clients that establish on many occasions a limited liability company or LLC to help protect their real estate assets. In doing so, and the reason they do so is because there's some tax deductibility and deductions they get from an LLC that they wouldn't be able to obtain from a corporate entity. Those are the issues you want to discuss with your CPA before you come and see an attorney like myself to set up a corporation or a limited liability company for you. Once we have those issues ironed out, we can discuss your particular circumstance and the setting up that entity for you, and hopefully make you a profitable business, both tax-wise and business-wise.